Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Matthew Bartolini. He's the head of SPDR America's research over at State Street Global Advisors. We're going to take a look at communication services and how it's reflecting a new reality within the markets. Thank you very much, Matt, as always, for joining us at MarketSite. What's happening in September to the sector landscape?
Yeah, so it's the biggest change we're going to have in the GIC sector in all of the history. So basically 10% of the market capitalization of the S&P 500 is changing their sector classifications. So essentially 7 stocks from technology, 16 stocks from consumer discretionary are joining 3 stocks in the telecom sector to transform into communication services. And like I said, it'll be 10% of the S&P 500, and these are some pretty high profile names like Facebook, Netflix, and Google, and they'll actually have the most amount of FANG stocks out of any sector in this new communication services.
So the obvious question is, why should investors be paying attention? I know for myself, that's where all the money is flowing to.
Well, I think from an investments perspective, if we look at the fundamentals of it, communication services represent sort of a quality growth at a reasonable price. Earnings growth estimates for these stocks is basically 16% for Q2. They have the third highest growth rate for long-term estimated EPS growth out of any other sector. Valuations are constructive. They're trading below their average premium to the S&P 5. Plus, their balance sheets are quality in nature. A higher ROE, lower debt to equity, and margins are much higher. So the investment there for a late cycle, we're looking for growth opportunities. Communication services is definitely one of those. All
right. So what do the fundamentals look like for the sectors involved? Do you see any drastic changes there?
So the big thing is that you're losing this historically defensive sector with telecom. So telecom used to be always this value, bond proxy, and now communication services is basically 60% growth oriented. From tech and consumer discretionary, their profile is still somewhat the same, still very growth oriented. Their valuations didn't really change. The big thing is for a defensive sector rotation model, you're going to have to shift, and you'll probably see people maybe dive a little bit deeper down to the industry level where telecom now resides.
It's really interesting because we saw it this week when you have markets a little bit weaker, you see money going to utilities, into telecom and so forth. That's going to change is what it sounds like.
Yeah, so if you're looking for a defensive position,
right,
you turn to telecom, that's no longer there. What's happened is that growth has been redistributed. Communication services really represents one of the higher attractive growth opportunities in the marketplace, which late cycle, that's definitely what we're starting to see too, investors position towards.
And that was my last question to you. Are you seeing any investors positioning ahead of these changes?
Yeah, so I mean, obviously within the State Street business, leader in sector ETFs, we had launched a new ETF in the last month. We've already seen over 240 million of inflows, which is just indicative of the investment reality that communication services has. Some investors positioning ahead of time in terms of maybe to pick up a little bit of excess return, given that these stocks rank highly on valuation, sentiment, and also momentum, given that Netflix and some of these others have been involved in M&A deals like Disney and things along those lines. So definitely have started to see investors start to position ahead of the GICS change come September.
All right. Well, thank you very much for joining us at MarketSite. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.